If you've lost thousands of dollars in the stock market this year, this is something you need to do before it's too late. Tax loss harvesting allows you to sell some of your investments to take advantage of a tax deduction. So, what is tax loss harvesting? Well, there's a $3,000 limit on the amount of capital gains losses that a taxpayer can deduct in a single year. However, the IRS will allow you to carry forward additional losses for future years. That means, for example, let's say you experience $15,000 of losses in the stock market this year. If you sell those investments and realize those losses, you could take advantage of the $3,000 deduction this year and carry forward the remaining $12,000 for future years. That means you could take advantage of $3,000 this year, the following year, and so on and so forth until your entire $15,000 loss is used as a deduction. So here's an interesting way you can do this without impacting your overall portfolio construction significantly, right? So you are going to, of course, if you own certain stocks, you may not want to sell those stocks because you believe in them, you think they're going to increase in price, and so you may be hesitant or reluctant to sell those stocks. But here's a suggestion, at least one way you can take advantage of tax loss harvesting without sacrificing a too big of a change in your portfolio construction. Of course, there will be a change, but this will at least minimize that change to some degree, right? So let's look at this example. What I have here is Nvidia stock and AMD stock, Advanced Micro Devices, and of course Nvidia and AMD are similar companies, right? They sell, graphic processing units and similar technologies. And in fact, if you look at their performance, you wouldn't be surprised to see that they're, similar performance for 2022. They're both down. Nvidia is down 59.3% for 2022 and AMD is down 60% for 2022. So what you could do if you don't want to change your portfolio construction to a large degree, if you hold AMD, you could sell AMD to realize your capital gain losses and then buy Nvidia stock. So sell AMD stock and buy Nvidia stock. Or you could sell Nvidia stock if that's the one you own and buy AMD stock. In that way, you realize the tax loss harvesting benefits, but your portfolio construction doesn't change that much because the returns should be similar in the near term between these two investments. Here's another example. Let's say you own SoFi and Upstart stock. So let's say you own SoFi Technology stock or Upstart Holdings stock. What you could do is sell Upstart stock and buy SoFi Technology stock, and in that way you still have a fintech stock in your portfolio, but you still take advantage of those tax loss harvesting benefits. And you could do the same on the other way around. If you own SoFi, you could sell that and buy Upstart. If you own Upstart stock, you can sell Upstart stock and buy SoFi Technology stock. And vice versa, you could flip them around. And this way, you maintain that fintech presence in your portfolio and you still get the advantage of the tax loss harvesting. All right, and one final example I will show here is, let's say you're investing in Home Depot and Lowe's, right? The two biggest home improvement retailers in the United States. Let's say you owned Home Depot stock this year, that's down 34%. Lowe's stock is down 30%. And so you can sell one, you could sell Home Depot stock and buy Lowe's stock. And in that way, you still have a large home improvement retailer based in the US in your portfolio. And oh, by the way, you take advantage of that tax loss harvesting benefit. So I know 2022 has been a miserable year for investors. Many stocks are down significantly. Indexes are in bear markets. Some growth stocks are down 50, 60, 70, even 95% from their highs. It's been a miserable year all around for investors, unless you've been short the market. Just a miserable year, right? Very few places to hide. Quality stocks, growth stocks, dividend stocks, all stocks really, most of all, are just down. And in this way, if you the tax loss harvesting strategy at least allows you to take something good out of this year. You get a tax deduction and you could carry it forward for future years. So at least let's take advantage of that so that going forward we can use those capital losses, the tax deductions, to offset some regular income and also to offset some capital gains in the future. All right, so that's the one strategy. If you've lost thousands of dollars in the stock market this year, that's one strategy I highly recommend taking advantage of is tax loss harvesting. Thank you for watching, and I hope next year will be a better one for all of us investors. See you then. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular stock advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 354% as of September 21, 2022, and measured against the S&P 500 returns of 112% as of September 21, 2022.